need to ask. I think Joe will accept that. So let's give a warm welcome to Joe Monte.
Okay, I want to thank everybody for showing up. I know you took time out of your day to be here, and it's a fantastic turnout. Thank you very much. I especially want to thank Abbott, Stringham & Lynch and Mark Sheffield for inviting me. I don't get very many opportunities to speak in front of a large group, and it's kind of exciting for me. I've been involved in small businesses for a real long time. I built Santa Clara Swim School in 1973 and opened it in 1974. That gives you an idea why I have so much gray hair. The business didn't make any money. I kept it for about 8 years before it went out of business. But I consider it a huge success for two reasons. Number one, I learned more about business than I would have ever learned in college. And I met my wife there, and we've been married for 41 years. And we have 2 wonderful grandchildren. So that was a success. So you can't always count your success in money. There's other ways to count your success. Since then, I've been in a large array of different ventures and worked for different companies. The worst job I ever had was I was working for a truck painting company, and they would put me on a creeper. Does anybody know what a creeper is? Okay, a creeper is what you lay on to slide under a car. They would put me on a creeper and slide me underneath an 18-wheeler truck with a black spray gun, and I'd spray the bottom of the truck. That's when I decided it's time to go back in business for myself. So anyway, it took me a long time to find my perfect place. I'm very much an introvert. I'm analytical. And I took a job in 1990 with Coast Capital, which was a private money lender. And their target market was homeowners that needed a second. And they're basically targeting B-paper borrowers. I considered it very predatory, didn't like it, but I used that vehicle to go after owners of commercial property, usually owner-occupied commercial property, that commercial loans have prepayment penalties on them. So these owners had a lot of equity in their property, but they couldn't pay the loan off because of the prepayment penalty, but they had an opportunity to buy another business, buy another building, and I was in a position to arrange a loan for them. So all of a sudden, I was doing something that was very rewarding to me, and it was providing a huge benefit to my clients. So I went out and got my real estate broker's license, and for the last 25 years, I've specialized in providing financing for business owners exclusively. So that's what I do for a living. Now, I'm sure a few of you are aware of the fact that we had a recession in 2008. And when we had the recession, lots of banks went out of business. Bears and Stern, Countrywide, Lehman Brothers, Washington Mutual, Wachovia, Downey Savings and Loan, and a whole lot others went under, gone. And to save the economy and to keep us from going in deeper, Congress passed a stimulus bill. And in that stimulus bill, they gave banks over $2.2 trillion to loan to you business owners to help your businesses grow. Well, at the same time that they did that, the Federal Reserve Board came out with the most draconian underwriting guidelines we have ever had in this country. And banks now are absolutely terrified when the feds come in annually to audit their books, because if they find even the slightest little mistake, they penalize the banks. How many of you, when you refinanced a house, had an 800 credit score, great income, everything was perfect, and they run the credit report, and 5 years ago you were 30 days late on a credit card and you don't even know why, and they want a letter of explanation for it. I'm sure you've all experienced that. It's not that the bank wants it. The bank knows that if there's anything on your credit report that's negative, and they get audited and there's not a letter in there explaining it, the feds are going to penalize the bank. So it's not the banks that aren't loaning the money. It's the feds that are keeping the regulations so stringent that it's really difficult for a bank to loan money. But you can get a loan. And the trick here is to set up a loan. So here's an example. Prior to 2008, the amount that the banks had in reserves was about $800,000, $800 million throughout the entire country. Now it's over $2.4 trillion. And the reason that went up is because the banks are finding it very difficult to find someone to loan money to. They want to give you the money. So bank financing has some huge advantages. Number one, if you go to a VC, they're going to want a big hunk of your stock or an angel investor. And it's their money, so they're going to want a lot of control of your company. They may even want to be the CEO. So in some instances, that's not bad. If you're a software engineer and have no idea how to run a company, but you got a great product, that help might be wonderful. But do you really want to give up control of your company and give up a huge hunk of stock when it's possible that you may be able to get a bank loan? So here's what you got to do is, number one, you have to start with really good accounting. If your accounting isn't impeccable from day one, it's not going to happen. Business owners are famous for not wanting to pay taxes, so they will turn around and buy a new computer system, buy some new equipment, do tenant improvements on the building, and they'll write it off that year as repairs and maintenance or office expenses, when it should be capitalized. And the IRS sends out a publication to CPA firms. You probably have to buy them, but anyway. And one part of that manual on the new tax rules and stuff like that is guidelines on what should be capitalized and what should be expensed. And they used an example on the one 2 years ago. And number one, they didn't call the business owner an idiot, but I think he was an idiot because he was writing off a 1960 vintage Ferrari, saying it was his car that he used for sales calls. Now, is that a red flag? And he said, well, my clients really appreciate it when I take them out to lunch today. So the IRS couldn't nail him on that. But he put a new engine and a new drivetrain into the Ferrari, $20,000 expense. And he wrote it off as auto expenses, repairs, auto repairs. I probably would have thought that would have been that too. But the IRS came back and said, no, you're extending the life of the asset. Therefore, we're taking that away from you, and we're going to tax you on that $20,000, and you're going to pay penalty and interest. So being the business owner, in the long run, you're just opening yourself up for an ugly audit. And if you believe that your business is going to grow by capitalizing it and depreciating it, you're going to take advantage of the tax breaks down the road when you even need them more. And you're going to make my job a lot easier because your business is going to be more profitable. You need a short business plan. Now, I don't want a book. It's more of an executive summary. I want the bank to know who you are, what your experience is, what your product or service is, the benefit it has to your customers, who your competitors are, what's your competitive advantage over your customers, and if location's important, why your location is important. That's it. 2-3 pages. That's all we need. That way the underwriter reads that, and then after they get through reading that, everything else will fall in place. It'll make sense. If you have credit issues, run a credit report before you even talk to a bank. And that'll give you time to talk to credit repair places. And there's attorneys out there that specializes in cleaning up credit. And this is the time to do it, not once you submit a loan. If you have something that's not going to come off, but you got a really good explanation, then document the explanation. Suppose in early 2008, you got a loan to build a new house. And halfway through building the house, the bank went out of business. They stopped funding the loan, and you got foreclosed on. Well, normally a foreclosure is a deal killer. But if you have, with an explanation like that, and if you have the documentation to prove it, and they can put it in that file, well, when the feds come in to review your loan file, they can show the documentation, well, this foreclosure really wasn't his fault. What I'm trying to tell you is, you got to make it easy for the bank. Okay. The bank's going to require more than this, but this is the big stuff. They want 3 years personal and business tax returns. If you're a brand new business, you won't have the business tax returns yet, but I'll get into that later. They're going to want a P&L and balance sheet for the last 3 years, and aging reports for accounts payable and receivable. Well, if you have items in your accounts payable in the 120-day column, and you submit that, you just killed your loan, because if you're not paying your bills, the bank's going to figure you're not going to pay them. So get your bills caught up before you submit the loan. You have to have a clean accounts receivable and payable. I have a client that their accounts receivable, it's an advertising company. They sell premium advertising space, and they have a number of outlets where they control the space. I've done loans for him for 20 years. When the recession hit, he had some opportunities to purchase some competitors' material. And I asked him for his financials, and he had $1.5 million in the over 120-day column. And I said, you can't, that'll kill the loan. Just write it off. He says, I can't write it off. I said, why not? Well, I use brokers, and brokers are my main source of getting customers. And I have 2 brokers that have been great friends of mine for 20 years. They are my main suppliers of advertising, and they continually give me advertising, and they're making payments on the $1.5 million. I said, are they making payments on a monthly basis? He said, yes. Do you have the checks? He said, yes. I said, okay, let's take this $1.5 million out of accounts receivable and move it on your balance sheet as notes receivable. And we'll show the bank the checks showing that they're making payments on it. We did that. We got the loan done. Now, the other thing is banks are going to want to know that you have enough cash flow to support yourself and service the loan with a little bit extra. And most business owners, you get down to the bottom line, and sometimes there's a big zero, and other times there's not a lot of income to support it all. Well, if you go back in and really look at your expenses, this is the fictitious thing, but this is very typical. You can find one-time expenses that you can back out and show underneath your net operating income that these were one-time expenses, and in this case, he had a huge amount in his office, more so than previous years. I said, how come you got so much in office? Well, I spent $15,000 on new computers. It's a one-time expense. He should have capitalized it, but it's a one-time expense. So we showed the invoices and took pictures of the computers and put it in there. Depreciation, you can always add back in. He's growing, so we had a relocation expense. That's a one-time expense. You can add that back in. Amortization, you can add back in. He had a partner that was a good friend, and now he's not a good friend anymore. And it ended up costing him $40,000 in legal fees to get rid of his partner, a one-time expense. So we have $94,000 of add-backs that we can add to his net operating income, and all of a sudden we got him over the amount to debt service the loan. And I've had clients where I've had $500,000, $600,000 worth of add-backs. So it can really get big. Back to what I was saying, you want to capitalize everything you can. Yes?
Quick question. You're going through this, I think that I'm assuming that this is applying to a singular person who's starting a company.
I'm getting to that in a minute. But no, this is any business. It can be an LLC, a corporation. Most of the businesses I work with are just have a sole proprietor, single operator, or maybe 3 or 4 partners.
So every partner has to have 3 years of clean
Yes.
background? Every partner?
Well, if they own more than 20%, yeah.
Every partner.
Well, you may end up spending $40,000 to get rid of a partner. Anyway, so back to my very first slide, get a good accounting firm, CPA firm, and work with them from the very beginning. Let them know what your goals are. I want to get up to $4 million in sales in 3 years. Tell them what you're trying to do. And then to get that, I'm going to need this much financing. And then they can help you decide what items should be capitalized. And there's some gray areas, especially in repairs and maintenance. But the more items that you can capitalize, the more profitable your business is. I have one client that I've done a lot of construction loans for him. He has $700,000 of depreciation every year. So he doesn't pay taxes until he's put over $700,000 in his pocket. And he's making about $1 million a year. So that's how dramatic it can be. And it was just adding up, depreciating item after item after item after item over. I've worked with him for 15 years.
Joe, just a comment. So there's a lot of other things besides just capitalizing equipment purchases, which you may have an option. You talk to the accountant and say, hey, it's important to me to show as much profit as I can in the startup company because I want to be able to get a bank loan. It's not just, if we know that, we can help you. Okay? But so often, we think that the bias is that you want to pay as little taxes as possible. But it might be to your benefit to say, no, I want to show as little loss or as much profit as possible. If the accountant knows that, we can do a lot of stuff.
Exactly.
We can capitalize organization costs, development expenses, startup expenses, stuff like that, which we normally will write off. But, for tax purposes, you have an option to capitalize some of those things. Think about when you're strategizing, how are you going to get your financing?
Exactly. I mean, the point is you need to work very closely with your accountant and let your accountant know what your goals are. Because I'm not an accountant, and I can't advise a client on what should be capitalized and what shouldn't. But I do tell my clients, well, if you think that's even a possibility, save the receipt or invoice, and when you go in for your yearly, whatever, quarterly, things, ask your accountant, is this something I can capitalize or not? And he'll tell you. And then now you can depreciate it over, depending on what it is, over 3 years, 5 years, 20 years, depending on what type of capitalization it was. And when you depreciate it, you get your tax break then. Okay, now, for people that are starting a new business, number one, I have a different definition of a startup than most people in this room do. A startup is not a business that's necessarily just opening up. If you got 10 years experience in the same industry, and let's say you're a software engineer, and you developed a piece of software that it's going to fill a huge need, and you can prove that if you build it, you got all these customers that'll buy it. I don't consider that a startup. I just consider it an extension of your 10 years in the industry. Now, if you're that same software engineer and you take a new girlfriend out to Alexander's and you have drinks before dinner, expensive steak, wine with dinner, after dinner drinks, and they give you a $400 tab before the tip, and you say, I got to open up a steakhouse because I'll get rich. Now, that's a startup, and you know what? Please don't call me for financing. I can't help you with that one. Anyway, but what you need to do is you need to prove that if you build it, you will have customers. You have to prove it. So letters from, letters from future customers. I have a machine shop I'm working with right now that's ready to grow. He's got a new purchase order from a well-known Silicon Valley company. And with that purchase order, I'm going to be able to go to a bank and get him the financing he needs to ramp up to fill this new order. You got to use your imagination. I don't know your business, you do. So you got to really think about this stuff. Now, Fit to Subano, they are a startup gym in San Francisco. There's two partners in it, Kevin and Lewis, and they leased the space. They threw $300,000 of their own money into the tenant improvements. They're paying rent this whole time. They ran out of money. I belong to a group, it's called BAMA, Bay Area Mortgage Association. It's for commercial real estate brokers. I'm the only one that does business loans. The rest of them do commercial real estate. One of them came to me because one of their agents had been working on this loan for 6 months and was getting nowhere. So what I did was I met with them. They had both been personal trainers for over 10 years. They both been filing Schedule Cs as sole proprietors. They both had been paying other gyms $2,000 a month for the right to use their gym to have their customers come to them for personal training. So I said, okay, well, the $2,000 a month, that's easy. We can add that back in because you're not going to be paying that. But they were still way, way short of showing enough income to qualify for the loan we needed. They needed $500,000. So I got them to get letters from all their clients that they're doing personal training saying that they would continue doing personal training with them at the new gym. Not only that, that they were going to discontinue their membership at their current gym and join this gym. And because they're personal trainers at gyms that have other personal trainers, they told all these other personal trainers that they would only charge them $1,750 a month if they want to train at their gym. So we got letters from a whole bunch of other personal trainers saying, we're going to come there as soon as the place is built. I got them a $500,000 loan with a credit union in San Francisco. So they would have been out of business. They would have spent $300,000 and they still would have been on the hook for the lease. So there would have been a double whammy. So you can get financing for a new business, but not my definition of a startup. It's got to be, you got to show that you know what you're doing, you got experience, and there'll be a market. And the TB, Business Finance, used to be called Today and Beyond. A good friend of mine, Steve Belleville, told me I got to change the name because nobody knows what Today and Beyond is. So I changed the name to TB Business Finance. Anyway, Lionel Soto from California Bank of Commerce has joined me, and he is going to talk to you about the advantages of young businesses banking with a small community bank.
Thank you, Joe. Thank you, Mark, for having me today, ASL. My name is Lionel Soto. I work with California Bank of Commerce. So we're a community bank, it's about $725 million in assets. Headquarters are in Oakland. We have branches in Lafayette, Fremont, and San Jose. Most recently in the South Bay in the last year. So we're looking to build a customer base here. We have some experienced bankers that work with me. So I'm a relationship manager with the bank. What that means is I bring in customers and I manage my portfolio by helping out my customers obtain financing, introducing them to other partners such as Abbott, Stringham and Lynch, merchant service providers, any types of service providers that can help your business succeed. Your bank should be helping you with those things, providing introductions, maybe even introducing people that might want to invest in your company. So Joe made some good points during his presentations. What California Bank of Commerce looks for in a potential borrower, number one thing all banks look for, the ability to repay the loan. If you can't demonstrate the repayment ability, nobody's going to lend to you. Or you're going to have a hard time finding traditional financing. There's other means of financing. There's micro lenders, there's credit unions, there's big banks, and there's community banks. So I'm going to tell you some of the difference between going to a big bank and going to a community bank. Obviously, the big banks, they have branches everywhere. So that's one definite advantage. But the way community banks mitigate that is a lot of banking today is electronic. So unless you're a retail and you're dealing with a lot of cash, do you really need a bank on the corner? Most banks today have remote capture. So if you're a business that takes a lot of checks, for example, we can bring the bank to your office. And we do that by installing a remote capture scanner. So at the end of the day, whatever payments come in, you can go in to the online banking portal, scan your checks, and there's no float that way. A lot of these things happen now electronically, like I said. 9/11, that changed the banking industry tremendously. When that happened, a lot of flights were grounded. So the checks that traditionally were traveling to the Fed were sitting there. So all those payments and transactions took about 11 days, 12 days, 2 weeks almost to clear the banking system. So what happened during those times is that's when remote capture started gaining traction, and electronic files then became more widely accepted because of what happened during 9/11. So like I said, you don't necessarily need a branch down the street. Unless you're a retail operation that has cash, then yeah, you might need to go with a money center bank. So as Joe said, banking is a highly regulated industry. So banks want to keep their portfolios fairly clean because you don't want to get, as he said, audited and have bad marks in an audit. And then now you're taking a reputational risk if that gets out to the market. And so then people may be afraid to bank with you. So 3 years tax returns, 3 years financials. That's what most banks are going to ask for, okay? The big banks, they're going to try to fit you into their boxes, okay? The small bank, the community banker, they'll come out, they'll hear your story. So maybe you had large losses in year 1. Year 2, those losses are now climbing back into the black. Year 3, you're profitable. So if you tell a good story, you have good projections for the future, the bank's going to look at your most recent activity and give that the most weight, okay? So that's how you can achieve a good relationship with your bank is you have, like you said, you document things, something happens on a one-time basis, but that's not going to happen going forward, and that's what caused you to have a loss. The bank's going to understand that, okay? What you should look for in a banking partner. You should do some research. Hey, the internet is a great thing. If you're a startup with less than 3 years of history, there's banks out there that will deal with you. I'm not going to give you those names right now. But if you Google startup banks, you'll get a list of banks, and maybe you might want to start there if you don't have the history, okay? If maybe you've lost money the last 3 years, your banking partner should know private lenders as well, so they can introduce you maybe to them. Just because the bank says no doesn't mean that's the dead end, okay? So what you want to know about your bank? Do they have the products and services to support your day-to-day operations? Do they have the types of loans that you're looking for? Are you looking for short-term working capital? You got to ask those questions. Does the team handling your company at the bank understand your business and your needs? Okay, that's big. The bank doesn't know what you need. How are they going to help you? So you need to come in and, like I said, have a good background, have a good story, have good projections going forward. Does the bank allow access to their networks? So personally myself, if I have a customer, and the customer comes to me and says, hey, you know, my CPA, they're doing a crappy job. Can you introduce me to somebody? Yes, I can, most definitely. Call Markup. Give out their name. If you have a merchant services company that's charging you too much on a month-to-month basis. Like I said, banking is electronic now. So a lot of people accept credit cards. Credit cards is a very expensive product to have, unfortunately. Your bank should hook you up with their partner. They should have somebody that services their merchant cards. They should have somebody that provides you a business credit card. Maybe you don't need a line of credit for $150,000, but you need a credit card for $10,000 just for month-to-month expenses. Are you able to reach your banker on the phone? Or are you calling an 800 number where 1 of 10 people pick up the line? They don't know your business from the next one. And as I've said, they should be a trusted resource for other referrals. So they should have strong connections in the community, other small businesses that help provide services. So community banks, we channel most of our efforts in the communities that we serve, okay? So for example, us in San Jose, we're looking to help local companies in San Jose. Our bank does the whole Bay Area. Like I said, our restriction of branches does not stop us from banking companies in San Francisco, Oakland, Gilroy, Morgan Hill, East Bay, Walnut Creek, Danville. Bank officers should be involved in the local community. So, for example, they should be serving on nonprofit boards. I serve on the nonprofit board, and I may be serving on 2 soon. Other officers in my bank also serve and give back to the community in that manner. That's when you know they're invested in the community, is when they're giving back time. Community banks have local decision making, okay? So that means that your request is not going to sit in a queue for 2 or 3 weeks. We're going to get to your request. We're going to determine if it's the right deal for the bank. And we're going to give you a timely response. We're not going to leave you hanging out there. So that to me is the biggest value I provide is if you come to me with a request, I'm going to address that request within a week. And you'll know if the bank is interested in receiving more information and moving forward, or if the bank's going to say, at this point, you're not a good candidate for us, but you may want to check out A, B, and C, okay? Depending on your situation. Community banks can get more creative with the financing. So as I said earlier, a big bank would try to fit you in their boxes. We're a little bit more flexible with the covenants and with the way we structure a loan. Generally have lower fees. So bigger bank will charge you for a debit card replacement. They'll charge you for a statement. They'll charge you for a image of a check. A lot of those things are included with your basic community banking packages. Most community banks have different packages. So if you're a small business with small transaction level, there's an account for that. If you're more a commercial type company with large transactions, so I used to bank an insurance company, a drug testing company. They had tons of transactions. So I had to put them in the commercial account because they were easily having 1,000 transactions a month. So a lot of employers were sending their employees for their opening drug tests to them. And that was one that had a great relationship because they were receiving lots of insurance checks. So they were using the scanner for that. Generally have better customer service. So you're going to call in to the person that's managing your relationship. For example, I'm not in the office now, but I have a support person monitoring phones and emails. As soon as I'm done here, first thing I'll do is check my email. So if any of my customers reached out to me, I'll reach right back out to them and say, I've got your request and I'm working on it. Then I can send that to my assistant, say I need a copy of this or a copy of that. Please email it back to me, and then I can forward the email back to my customer. California Bank of Commerce was recently designated a PLP, Preferred Loan Processor for the SBA. So what that means is, does anybody know what SBA is? Everybody? Small Business Administration. So we have that channel as well, in addition to our traditional financing. So if you've already exhausted all your other options and you fit the requirements of the SBA, our bank will apply our underwriting standards and send off a package to get approved for you. So that greatly reduces the turnaround time. So SBA is not the easiest financing to navigate. Our SBA lender will work with you from step one until the loan gets funded. Okay? Generally, for most community banks, you will have access to the executive team. So you'll know who the directors of the bank are, if that's what you're interested in. And they should. Me, if you ask me, you want to meet with an executive of my bank, I'm more than happy to introduce them to you, or you to them. Does that make sense? Yes? All right, so we're going to back up a little bit, and we're going to help you decide on who your bank should be. First of all, you should determine your product needs and do some research on the internet. Okay, we talked about that. Is the bank going to be able to service all your needs? Or do they have the right partners in place? Are you receiving ACHs? Are you receiving checks? Are you receiving cash? All those things you should address in the first meeting with your banker to determine if they're going to be able to service those needs. Okay? And if after you do your research, if you're still having a problem determining which bank you should use, you should ask your CPA. You should ask your lawyer. You should ask other business owners. You should ask people in the same industry as yourself. You should ask your broker. You should ask your tax preparer. All those people should know banks. And they should know who does a good job and who does not do a good job. So trust them to lead you in the right direction. Okay? That's all I have for you today. Any questions?
I was just wondering, I understand what you're doing with a local business, working with a local California Bank of Commerce. What happens if this goes up and establishes a Minneapolis division? Is there going to be a Minnesota Bank of Commerce for that business?
That's a very good question. So if you grow up to that level and you get to be national, we can still service you. But it's up to you to determine if you want that. So do you want to, if you have a branch in Minnesota, do you want to have a bank that's in California? Probably not. Unless your headquarters is in California and all the decision making happens here, then we can probably still work together.
Could there be a Minnesota Bank of Commerce that you could do business with?
Not related to us. Yeah. So our headquarters, we're a state chartered bank. There's over 130 state chartered banks in California. Okay, that number is actually down. There's a lot of consolidation happening in banking, as Joe said, when the recession hit. A lot of banks went under, a lot of banks got merged, a lot of banks got acquired. California Bank of Commerce actually acquired a bank last year called Pan Pacific Bank. And that's how we moved into the South Bay. So we took their 2 branches and now we have a presence here. Good question. You had a question here?
Yeah, one for you and one for you, but for your PLP, do you start out with the SBA or do you start out with like a community bank? And then
No, you start with the bank. So the PLP, good question. Let me go to my notes here. So California Bank of Commerce has been designated as an SBA Preferred Lender. Under the PLP, SBA lenders such as California Bank of Commerce are delegated loan approval, closing, and servicing authority by the SBA. So they're trusting our judgment, basically.
Okay.
Yeah. So we have a very experienced SBA lender. He's got about 20 years of experience. And usually the preferred lending status doesn't happen as quickly as it happened for us. But the person we have is very well known by the SBA. So they gave us some consideration that way. Yes.
And then ever so quickly, it was an interesting point where, you know, you're both saying know what you're doing up front and you know, get it straight from the beginning. But I thought it was interesting. Do you want to pay few taxes or show as much profit?
We want to see profit.
Right. But see, that's interesting because if you start out as a business not thinking that you need a bank loan, you want to save taxes.
Right.
Save on taxes.
Correct.
So you're doing it this way, and then all of a sudden you're going, oh, I'm expanding fast, but now I need a bank loan. How do you, I mean, is it
Okay.
okay? I mean, you can switch it, right?
The example I showed you was one-time expenses. I didn't redo the person's tax returns.
Okay.
I put the tax returns on an Excel spreadsheet exactly as it was on the tax return with the expenses. I drew a line on the bottom. I put add backs, one-time expenses, you know, and then I listed them, and then I came up with an adjusted net operating income. So, you know, most of my job is undoing mistakes. But the problem is, for instance, that computer system, if they get audited and the IRS is auditing them and they see that they wrote off that computer system, they're going to turn around and not allow that expense. They're going to say you should have capitalized it. So you're sticking your neck out by writing off. I have a client in the Central Valley. I've done $15 million worth of financing for him. It's a flea market. And the way I got him approved, the county was going to close him down because the county grew up around him and he was causing traffic problems. He needed to put in a parking lot and widen the street, put in a traffic signal with a left-hand turn lane into his parking lot. We're talking about big bucks. He searched for 5 years to get financing. If you go to a bank can't tell you how to fix your financials. If you go to Lionel and the person's got $1.5 million in the past 120-day column, he can't tell them, move it over here, okay? He just can't do it. I can do it. So I went through and I took 5 years of the guy's financing and met with him. He had put in a ton of money in improvements, and I took each one of those years and we took pictures and had invoices and everything else to document that a lot of those expenses that he's writing off should have been capitalized. So we proved the cash flow, and even though he was in the Central Valley, I got him approved with a bank in San Francisco. So part of it too is knowing what bank will do what loan. There's a huge difference. Banks have different appetites for different types of financing.
One of the things that some startup company owners don't understand is you can actually have a couple different sets of books. Okay. I mean, that doesn't sound like, well, wait a minute, no, I'm not supposed to have two sets of books, you know, one that's in the door and then the one that you send to the IRS. But you can, for example, you can be on a cash basis for tax purposes, and which might be more attractive, so you pay less taxes. You know, cash basis meaning you're not going to recognize those revenues for those receivables yet because you don't have them. But for books, you can be on an accrual basis, so you can not pay the taxes yet until you get the money. So same thing with capitalizing. You can expense a lot of normally capitalized assets for tax purposes, Section 179 and bonus depreciation and so forth. But you don't have to do that for your financial statements that you give to the bank, right? So that's where the accountant can help you. So you can kind of sometimes play both sides of that. Right? The other thing you can do is you can amend tax returns back, 3 years. So that you can sometimes do that, but the problem you described, well, what if you've already done this and now you realize, so, yeah, that is a problem for tax purposes, going back and forth. It's hard to do. So you really need to think a lot about planning, going forward and say, am I going to need financing? How important is that? And that might be better, if it's important to get this cash to make those decisions up front, especially if you're not making a lot of money. You want those things on the balance sheet. So it looks like you've got a good solid, that's the other reason you capitalize stuff, is it puts it on your balance sheet. It makes you look stronger.
I've only asked one client to amend his tax returns. So as long as I've been doing this, I've worked with the existing tax returns. And this guy had an idiot for an accountant. The guy had 6 apartment buildings. And the accountant threw all the expenses on one building. And he says, what difference does it make? It all comes out in the wash. Because your gross income and your gross... And guess what building he wanted me to refinance? The one with all the expenses on it. So I told him, I'll refinance it for you, but you got to amend your tax returns. Because, anyway, that was one of the worst accountants I've ever worked with.
What's the typical cost of bank financing?
Well, it depends on what type of financing you get. SBA financing is more expensive. It's typically 2.75 points. Some banks, a lot of the smaller banks, like Lionel represents, they will pay the broker a 1% referral fee, which means I can charge you less. Other banks, usually the bigger banks, won't pay a referral fee. So, if you're using the broker, I'm going to throw my fees on top of that. Most of the clients, I've never worked with a business owner that hadn't been turned down multiple times by banks before they got to me. So usually they're not penny pinching and trying to get the best deal they can. They appreciate my services and they're willing to pay for it. If they could just walk into a bank and get the loan on their own, why would they call me? Now my past clients, such as the gentleman owns the flea market, I've been doing financing for him for over 15 years, and I'm still doing financing for him, and he doesn't need my help. But he's willing to pay me because of he values what I bring to the table as far as helping him put it together.
SBA has longer terms as well. They can go out to 25 years depending on the type of financing that you're looking for. Really good resource I forgot to mention if you're interested in information about the SBA, SBA.gov has a lot of good information for startups, for existing companies looking to get some type of financing. They'll tell you what type of financing they don't do. And there's also tutorials for how to create business plans. And there's really good information. So if you take anything away from today and you're looking for a way to finance your business, you haven't considered the SBA, at least look there and keep that as something that's an option.
You can go on their website and get their regular updates and emails from any district that you want, and they will inform you of seminars, webinars, all that type of stuff with the topic that they're going to be discussing. So if this is something that you want to pursue, you can get a lot of SBA education emailed to you on a regular basis.
Does the banks take into consideration the industry that you're in?
Oh, definitely.
Because, for example, there are industries like the retail that have cash every day, right? And then there is the new tech, which is social media, that doesn't have necessarily cash, but they look at a couple of different things, i.e. traction as opposed to revenue. Is that something that banks look into?
Getting back to what I was discussing before, if you have a new industry in, let's say, social media or whatever, you need to prove that there's going to be revenue there. I can do a loan for a new company prior to their revenue stream. But you gotta be able to prove that there's going to be a revenue stream. It just can't be a good idea that you think is gonna take off. Banks are highly regulated, and again, they are terrified of the Fed audits.
Now, do they deal with investment bankers as well as angel investors?
Certain banks specialize in that. Your normal
Yeah.
bank, probably not.
And I'm not allowed to deal with angel investors or VCs. I don't have a security exchange license. So I have a real estate broker's license, and you really can't fix them. So I'm not an expert on angel investors or VCs or even,
But I find
these
a lot
funding.
of bankers will give you, say,
Nobody knows.
Well, I mean,
it's
That's-
amazing.
That's,
so, but,
So it's not, we've done 4 banks, and I can tell you, not one.
okay,
So that's sad.
yes, it's
Don't
sad,
get
but
promises you get deep.
I don't have any control of that,
And accountants are the same way. I'm sorry to say, but accountants are the same way. They will introduce you if they think you're quote unquote worthy. Sell the story, sell the idea, sell this, sell
Okay.
that.
all the accountants in the room, cover your ears. Accountants by nature are analytical introverts. And you would think that they would be my biggest source of referrals, hands down, because they know when their clients need a loan. And they are my worst source of referrals because they don't put themselves out there, and they're, because they are typically introverts and analytical type people. You gotta uncover your ears now.
but that's a very good point you made. And so that's why you have to ask around, do your research before you. The banker, like you said, they're going to tell you whatever it takes to get you in the door, figuring that once they have you in the door, it's really painful to change banks. It's what it comes down to. And so if you have a bank that understands that it's painful for you and is going to help minimize some of that pain, then you should probably deal with that person.
Well, I'm going to
Yeah.
tell you, there's no pain for me to change banks. Maybe painful for the bank, but not painful for me.
You're the exception to the rule.
Anyway, as far as, you need to know what banks do. I have one loan with Bank of the West right now, and I just closed a loan with Chase. So I do occasionally use large banks. Very seldom. 90% of my loans I'm doing with small community banks and credit unions. And the big banks, the decision making isn't made at the branch, isn't made by the person that's taking it in. Salespeople, which bank loan officers are overly optimistic. They're not lying to you, they're just optimists by nature. We can do that, and they take it in, and then, they have the appraisal done, and title report in, and you do all this work. It takes you 3 months to get it all together, and cost you an environmental report, an appraisal, all this type of stuff, and then they send it off back east where the headquarters is, where the loan committee really is, and they say no. Whereas a small community bank, most of the small community banks that I work with, I give a very, very complete package to the bank, to Lionel or wherever bank I'm using. It's all laid out, already pre-underwritten. The underwriter normally will take it to the loan committee before they even work on it and say, is this the type of loan that you want to, do? And the loan committee will look at it and say yes or no. And this is in the first few days. So if they don't want to do it, I know within a couple of days they don't want to do it. I didn't waste any time. If they want to do it, as long as the numbers work out, and I've already pre-worked the numbers, it's going to get done. So,
Joe, how long, if you do one of these loans, and you talked about all those letters for that fitness center, how long did that
that
take?
loan took me about 3 months. But part of that wasn't my fault. Part of that, okay. The penny wise and pound foolish. Lewis and Kevin, they were getting bids for the rest of this construction. and it was coming in way more than they can afford. And the owner of the building says, hey, just use the contractor I use. She does all my TI work for me, and she does a wonderful job. Well, he doesn't need a bank loan to get it done. You know, he's a property owner, and he just pays her cash. So they decided to get a bid from her, and a bank on the construction loan is going to check out the contractor there. On construction, the biggest fear a bank has is that the contractor goes out of business, isn't reliable, and then here we got an unfinished project, possibly mechanic liens. It could be an ugly mess. Well, this contractor hadn't filed her tax returns for 3 years. I still got the loan approved. I'm not going to say how I got it approved. And with that contractor.
Time for one question.
Yeah, a question right over here.
So you help companies kind of rejigger their financials so that they can cover the loan by expensing what was
Right.
capitalizing what was previously expensed. So what kind of coverage are they looking for? Is it
It would
2x the
depend.
loan amount,
If,
and that thing?
okay, if real estate's involved, suppose you have a business and you want to buy the building that you're operating out of, you're going to need a 1.25 debt service coverage, which means if your monthly payment is $1,000 a month, your net operating income after you pay yourself has to be 125% of that. So when, you know, if you are doing a straight business loan, no real estate involved, usually you need to have 2 to 3 times the income to support the loan. So if your loan payment is $1,000 a month, you need to be showing $3,000 a month after you pay yourself of net operating
And is
income.
that because they encumber the real estate?
Yeah, there's a lot less risk if they have real estate encumbered. So different types of loans have different requirements for debt service
What kind of
coverage.
community bank should look at to react to
And they all have approximately the same debt service coverage. Well, I want to thank you very much.
Thank you very much.